Perfect. So the NFP is ahead, and what can we expect? What to expect? I think that's the biggest topic into this week. Is it's going to be higher or lower NFP? When it comes to trading, that doesn't. Well, it matters in a sense, but it not a full sense. And when I mean that, I mean by if you have let's say long US dollars, that will matter to you, right? Or short US dollar. If you have exposure on anything that is related to USA, it's going to be really important for you. But if you have exposure to fixed income sort of stuff, that doesn't necessarily have a big aspect for you. Okay, so there's no really big sense for that. Cool. But for us that are trading CFDs is quite a risk, that sort of fundamental data point. So that's what we're going to be looking today. And I guess a lot of people are already interested to see. Then we're going to be looking at the ECB tonight. Well, tonight for me, but most likely this morning, sort of afternoon-ish for everyone. So ECB is set to cut 25 basis points today. How can that change the perception of the market? How can that influence the market? Okay, so that's going to be really important for us. And so that being said, shall we long EURUDollar? Shall we short EURUDollar? That's what a few of you are most likely looking to, because we have two big things happening. So we have the ECB and we have the NFP. Okay, and quite honest, these are the two biggest events of the week. I was just stopped for think because we had the Bank of Canada, but it wasn't that big. So NFP and ECB is definitely the biggest two of the week. And if you do have the right sort of mindset, risk methodology and everything else, you have definitely good setups to trade into the NFP and the ECB. Lots of people say that it's not good because there's too much volatility, but too much volatility is good when you know what you're doing. Okay, you just make money because you have a move. Okay, you have a yielding, right? You have a yielding between price A to price B. So that is quite what everyone needs. You need volatility to be able to the market to distribute itself between prices, and we make money. And off momentum is good as well. Lots of people get confused by momentum and volatility. But anyway, so not here to talk about that today. So I'm going to put the risk disclaimer up as usual. We can leave it there for a minute or two as usual as well. You guys go through, read it all, and then I will be back and we can start. All right. So just first, see a lot of new names. P West, welcome. It's very good to see some new people here. David, not too sure. Maybe you've been here before or not, but yeah, welcome David as well. Hopefully everyone else, I'm not missing anyone, so that's good. So guys, welcome to Thursday webinar. It's we always do this on Thursday, so every Tuesday, Wednesday and Thursday from 4 to 5 p.m. in Sydney time. And it's full of knowledge. It's free. We don't charge you anything. We only ask for you to subscribe to the channel, the YouTube channel, and be into the Telegram group. If you have this link, it's because you are into the Telegram, so that's good. And that's pretty much it. And for the other ones, it's quite a pleasure to have you guys all here again, because I was just doing some maths, and it's quite a long journey that we've been together already, more than a year. So that's pretty cool, and I like to be sharing those moments with everyone. All right. So risk disclaimer is up. I'm going to leave that for a minute or two, and then soon I get back, we start. Cool. Another thing I forgot to mention is that if anyone have any questions, you can just put into the chat. If you don't want to, that people know sort of your name, don't worry. Just put into private message to myself, and then I will read without saying your name. All right. Cool. That being said, I reckon we can start. All right. So the first topic is the NFP. I'm using Finlogix economic calendar. So I'm going to send the link into the chat. For those who don't know, Finlogix is a sister company from ACY Securities. It provides economic calendar, market sentiment, charting tools as well, all for free. You don't have to pay a cent, all right? I will send the link on the chat for you to get access to the economic tools like the economic calendar. You just come into tools, and then you're going to have all the tools. So you have earnings calendar for those who trade the stocks. I'm not too particularly stock trader, but if you are, you have it here. Market sentiments, that's the one we use every Wednesday. So that's when we find the good trades. And then some financial widgets that you don't need to worry about. It's for like B2B sort of things, so business to business. But what we're looking for is the economic calendar. So once you click there, you have this beautiful economic calendar, and you can change as well the countries. So if you want to, you can select all, or otherwise you can just select which countries you want. So in this case, I just want United States and Euro area, okay? Also, you can select the impact. So I want medium to high, not too quite interested into the lows. And if you're not in Australia, if it most likely once you click on the link, will update already for your own time zone because of your IP. But if you didn't get it, maybe your computer doesn't, let the Google Chrome or any extension to verify your IP. So you can just change it here, but there's a few others here, okay? And that's pretty much it. So just basic things here: today, tomorrow, this week, this month, next month, and next week. And then you can select a certain period. Okay, so today. So today we have the euro area. Okay, so the ECB interest rates decision, it's widely expected already to be settled at a 25 basis points cut. So we have previously, well, at the moment, 2.4, and the forecast is to go to 2.15%. For those who have watched the video today on YouTube, it's kind of expected already, because I think more than 80% of the market has expected this to happen already. I'm just going to log into my prime market terminal. Let me just hide this one. Okay, cool. So, quite expected already in a sense. If we look into this one, the interest rates probability, that's for Australia. No, Australia has gone already. We can change for ECB, European Central Bank. And there we go. So 60% actually. So 60% is expecting already the market to cut. Okay. Probability 6%. Current rate is at 2.4, change by 25 basis point, and it's due today, 5th of June. Okay. So that will bring the rates down to 2.15%. Cool. So what could happen, right? There's basically three scenarios. There's the scenario that they do what the market is expecting, so they do cut 25 basis point. There's the scenario that they hold at 2.4%, and there's the scenario that they hike maybe 25 basis point. Okay, quite unrealistic, but we have to put into, in a sense, we have to put in into the table. So we have that measure. On top of those measures, you have the option to cut more than 25 basis points, so 50 basis points. Okay, so that is more aggressive. What do I think will happen? A 25 basis points cut. Okay, I don't want to reinvent the wheel here, and I just want to go with the certain what the whole market is expecting. That is, 60% is expecting 25 basis points cut, and that's it. Cool. So that being said, what could happen if we do have a 25 basis points? Okay, 25 basis points cut. Well, if that happens right at 10:15 in Australia time, just depends on your time zone, the market would be quite low volatility. Okay, it won't have too much effect because think about it. And what is the number one thing? What is the number one, top thing? I want actually you guys to answer me that. Let's see if anyone can get a little bit close. What is the number one thing that moves the market into today's word? Okay, let me see if anyone can have a go in this one. I'm gonna give 30 seconds so you guys can have a think. That's it. Aditya has it correct. Wow, that was quick. Unexpected scenarios. That's exactly what is moving the market. So unexpected scenarios is what will continue to move the market forever. So if the ECB, thank you, Aditya, for sending your answer. Unexpected scenarios is what will move the market. So let's say we have more than 25 basis points cut. What will happen with Euro will be very bearish, okay? Because yes, everyone is expecting a 25 basis points cut, but no one is expecting a 30 basis points cut, a 50 basis points cut. Why? Because from the market perspective, based on the economics from Europe, they are looking to, lower inflation. Inflation has been deflationary, so inflation has been falling, etc., etc. They judge to be correct a 25 basis points cut, as well Lagarde and everyone else from the board. So if the market ended up getting a higher cut, a bigger cut, that could be 30, 20, 30, 40, 50 basis points cut, that will be very unexpected, and this will shake the market. So if we have a look at euro dollar is trading right now at 1.1450. Okay, so quite interesting how the price action is going on here, because we sort of had these explosive moves, and then this one, and then here. So yeah, that's pretty much. Let me just. Yeah, so that is most likely reversing down. Okay, but the problem here is that no one is expecting the US dollar to be stronger. Okay, a lot of institutions are talking about the US dollar being on a up move, a little bit structural. So if we look here, when I've mentioned about this high move, when we had this high move here, everyone was talking about, oh yeah, now is the time. US dollar, we go all the way to 104, etc., etc. Well, that didn't quite happen, right? and the reason is simple, because that up move here was basically those people that made tons and tons of money down on this huge move down, taking the profits out. So that generates less liquidity into selling force. And then the market rally up, and then they had another opportunity to continue to short. And this rally up here didn't have any really structural longs. It only had a pullback. So people get confused about it, okay? There's an indicator called OBV, so it's on balance volume. It's quite useful to have a look into real money sort of index, okay? So I'm using this one. Let's go euro dollar. There you go. So let's say 15 minutes. Where is the tool? Oh, there you go. Cool. So here we have, okay. So that basically, it's a bit of a mathematics behind this, but just an easy way to explain is, if this move up is really a move up, then the volume on the longs should be high, okay? So in a sense is basically you see that we have this high here. So we see we have this high here right at this point, okay? So it's exactly the same here. I can just do a vertical line. There we go, and you can see that, okay? Cool. Let me do like a dashed line, okay? So basically, if the market falls, okay, if the market falls, then the volume on the short side should be on the selling pressure, okay? Now, when the market goes up, that should be going up as well. But that's the that's the thing here. So this was a sell volume, okay? And that actually ended up happening here. But now look at this part here. So this is that one here on the top. So what we have here is a imbalance, okay? Basically, if we look here, let me just take this one off. If we have a look, we have much more buys, okay? So the long pressure is much more stronger than the selling pressure that we saw from here to all the way down to this move. So this was quite nothing. And then we had this up move here into the volume above those highs. But the price wasn't above those highs. The actual price was down those prices. So that is pretty much indicating to me that it's going to be a huge move up. And that's exactly what happened afterwards, okay? And then now it makes total sense because this move went all the way up, and that's the highest point we got at the moment, okay? So that being said, let me take this off. Oh, quite hard. quite hard. Sorry, guys, just a second. Last one. Cool. So now it's the other thing. Okay, so we have a huge selling pressure. All right, so from here, this top point, we have down to here. So that's the lowest point of the volume. Yeah, here. So that's the lowest point of the volume. We have this down move, okay? And on the volume as well, we have this down move. So that is a good selling, okay? If we look back, this part here, this bottom here is this one. And then this one is this bottom here. So it's exactly the same. So that's no imbalance. That's perfectly fine, okay? And that's what I like to use the OBV. And at the moment, it's not showing me anything like it did show this part here, for instance, as well. Okay, cool. So I hope you guys got it. And I just want to show that for everyone. And that is what I've looked into the DXY, the US dollar index. And that shows to me that, oh, okay, wait a minute. So there's really no structural flows into it. It's just a technical sort of long, short scenario. Okay, so, and that's why all the move just retraced back after this huge move up. Cool. So what I'm expecting here is if the ECB do cut euro dollar, that is widely expected already. what we can see is nothing. Okay, we won't see anything because the cut is already precified. Only if something out of the 2.15 forecasted happens. And then after that, we have at 2:45, so 30 minutes afterwards, we're going to have the press conference. And the press conference is going to be really, really important, okay? Because that's when the market will start to move. Because on the interest rates decision, we can't grasp too much what will happen next, okay? And we are already halfway of the year. So we can't see like, based on the interest rates decision, we can see that they will continue to cut the interest rates, or that the Lagarde seems to be very dovish or hawkish or neutral, blah, blah, blah. We can have a overall understanding of the rate, but we can't really see what is going on. And that's exactly what the press conference will show us. So the press conference will show us what is actually going on. So if we have a press conference being very dovish, we already know that most likely they will continue to cut. But cutting is not always bad, okay? In this scenario, cutting, the market will take as a supportive measure for the GDP, for the gross domestic product, like did the RBA. So when we had the GDP from the RBA from Australia last Tuesday, actually, we had quite a funny reaction. Oh, sorry, yesterday actually. We had quite a funny reaction because that was one of the worst growth quarters since the pandemic 2022, 2023. Okay. So that was a really, really bad quarter for growth, and it was below expected. But it was the same as previously. So it didn't have any change. As of the RBA was expecting the GDP to be lower, but it ended up to be the same as previously. Also, that the market sort of took into factoring into a way of supportive measure for RBA to continue to do cuts into the economy. And that's exactly why the Australian dollar is becoming so strong in the last couple of days. Okay, so we had a trade on EURUSD that I've mentioned to everyone yesterday, to short EURUSD. Okay, and that's actually going pretty well. We shorted the market somewhere around here, and now we are into profit. Okay, another one that we had was the pound Aussie. Okay, the pound Aussie, we've shorted that one as well, and it's quite into profit at the moment. So that's the kind of thing that people misunderstand about central banks and everything else. Okay, so just pay attention into it. The OBV, I think you can't use into indices, but you can use into Forex without any problem. Okay, hopefully you guys can have a look on that. See this whole move down. Let me just one more example before we go. So we had this whole move down here. So starting here, okay. Oh, actually, we can go even higher. So we can go like here. Perfect. This one. And this one. Okay. So that is a actual selling pressure. Okay. We did actually had selling pressure, and that's when the GDP came in. Afterwards, we had sort of a move up. See how close it came to the area of the selling pressure? Well, over here into the OBV, we haven't had any of these move. So that was actually below. Okay. So that was here, and that was below this area, okay? It wasn't at that point. So that is here, okay? So see the difference? That is a big difference, okay? So the market actually sold off afterwards. And then this was the steepest point of the volume. So that may be because afterwards we had a long, and then that was the point of the long right here. So that was this one and this one. And since then, we saw the market rebouncing back again at this exactly same level. So that's exactly the same. So no changes at all. Same for here as well. So no changes at all. And then we had a big sell off and then a comeback at the same level and then a pullback again. Okay, so that is showing to me one thing: we are consolidated. So we don't have as nothing, literally nothing to do at the moment. We just have to wait. And what the market is waiting, the ECB. Okay, so that's what I just want to show you guys here as well. Cool. Let me take this off. What else? Okay, now the NFP. So NFP is tomorrow, so it's not today. All right, what are you guys expecting for the NFP? Does anyone have any clues? I wanna hear some comments. No comments. Okay, no one is expecting anything. That's interesting. Okay. All right. So tomorrow is the NFP, and it's going to be at tomorrow, and it's going to be at 11:30. Sorry, 10:30 into Australia time. All right. What is expected? The average hourly earnings to be quite higher than previously. So previously was 0.2, now it's 0.3. Then the NFP, the actual NFP was 177 before, and I was expected to 130. Then we have the unemployment rate to be maintained the same. And that's pretty much it. Okay. So we have a few things to talk, folks, because it's quite a tricky one. Okay. We have quite an interesting thing because the unemployment rate is being the same for quite a while. Okay, so if I click on here, you can actually see the latest releases, and it has been between 4.2 for quite a while since last year so pretty much 1 year. Okay, it hasn't been moving anywhere, so you can see here, like literally the same. Okay, so no big things for 1 year. 3 years, it's a bit different. And then 5 years, big difference. And then 1 year, there's big difference as well, whole spike and then back to normality. So when we look to 2015, for instance, let's say 2018, the unemployment rate was between 2.5 to 4. All right, 3.5 to 4. And then that's COVID. So that was an extreme event. But here is expected to be at 4.2. So that's not actually a bad thing because that is what the Fed is expecting for this year, between 4.2%. I don't think that, anything huge will be, because the unemployment rate is quite stable in a sense. Okay. quite stable, I mean like it doesn't have big effects or up or down. You will get the same thing for quite a while until something really big happens and then it changes. Okay, but at the moment that's it. Then we have the average hourly earnings, a bit of a decrease. A bit of a decrease into the year over year and a bit of increase into the month over month. If that comes mixed, that pretty much annulates each other. So that's no big deal. I think that the actual problem will be that non-farm payroll, most likely will come worse than the previous. How much? I'm not too sure. Okay, we can try to have a look into some of the papers. Oops, sorry. Let's say NFP. Spanish euro. Maybe we still don't have anything. Most likely we'll only have tomorrow because it's too early. Yeah. Well, we have UBS saying about the ECB meeting. We can have a look on that. Yeah, there's no big thing that will change. So yeah, I guess we can expect something below the 177, but I really don't know what number. Around maybe 128, 125. If everything comes worse, that's a problem. Okay, that's really short US dollar, and US dollar will probably make lower fresh lows. Okay, so we may see this bottom here being devastated, broken, like obliterated. Okay, so if it comes mixed, we want to have much. Then we have to play the safe haven sort of game. We have to go to US dollar, Japanese yen, this one. So we have to be shorting USD JPY, for instance. We have to be looking to long euro dollar. It just depends on what we have today as well. We have to be longing Australian dollar against the US dollar, that kind of thing. Okay. So I guess that's pretty much it for the NFP. But no big tax. Ever since we started with risk on and risk off market, NFP has had that much impact. Not much volatility during NFP. Yeah, because the whole market is actually paying attention into the central banks. Okay, because that's the central banks are be doing this. Tariffs, Trump, everything else. So that kind of data gets sort of obfuscated, if you know what I mean. Okay, so that's pretty much it. Cool. I guess we've came to an end. As I say, a bit of a quick one today. So we had a look into the high or low NFP. Most likely the actual NFP will come below. The unemployment rate will be maintained the same. The average hourly earnings will be as expected and therefore will be mixed. The ECB is set to cut 25 base points. That's what they will do. If something unexpected happens, if they pause, if they cut more than 25, if they hike, that's going to be a surprise right at 10.15. And then, shall we long or short euro? I would wait to the press conference and then have more certain to do something with the euro dollar. Okay? All right, guys. Thank you so much again for being here today. Hope to see you back next week. I won't be in the office on Monday. It's a public holiday in Australia. It's Queen's birthday. But yeah, enjoy your weekends. Take care and have a good one. Cheers. Jananda Sweets. Bye-bye.